Good afternoon, everyone, and welcome to today's Virtus Advisory webinar series featuring Playgon Games, listed on the TSX Venture under the symbol DEAL. My name is Corey Cohen, and I am joined today by my colleague Babak Pedram, and of course, Playgon CEO Darcy Crow and COO Steve Baker. We will take 15 to 20 minutes to share the Playgon story for some of our new investors, followed by a Q&A session with the management team for the remaining time. Should you have questions throughout the presentation, please use the Zoom Q&A function at the bottom of your screen, and we will do our best to answer everyone's questions. On that note, I will hand the call over to CEO Darcy Crow to begin. Darcy, you may go ahead.
Thanks, Corey, and welcome everybody to one of our first webinars. Hopefully, we'll try and do these regularly to keep everybody updated as we progress in our journey to build our company up and keep everybody posted. So obviously I'll just, we got a lot to cover here, and want to get to the very end for Q&A, because I think, by and large, a lot of you have maybe seen this presentation before. If not, we're going to run through it quickly just to give you a high-level overview, and I'll probably, focus in on a couple of critical slides that I want everybody to be able to take away and understand the magnitude and the massive opportunity for the company that we're faced with, and in unprecedented times in our industry. So obviously we'll get going here. So this our normal forward-looking statement slide. We're going to be talking about some things and numbers, and we seek safe harbor, just standard forward-looking statement. So a lot of times I get asked, well, obviously I get asked what Playgon is and what we do. The stock answer is we build digital content for the online gaming space, but it's actually much more than that. We're actually innovating the live dealer vertical within the casino space, and more than that, also we're an entertainment company. We build entertainment software for the new demographic, the new gambler, the millennials, the Gen X's, the gamer on the move. And that resonates all the way down to also the front line of our company, which of course are our dealers. The way we deliver our content, the way we train our dealers, it's much different than the incumbents in the industry. We want to focus on engagement. We want to focus on entertainment. So yeah, we build software for this great industry, but we're also an entertainment company. So, and again, that's supported by a management group that have had decades in the industry, both on the online gaming space, and our CEO Steve's had decades in the operational areas of business when he built and worked with Shaw for many years. So, I mean, we've got a very experienced management team that this resonates down to, as I say, our front lines, where we want to be an entertainment company to the new gambler, and we're bringing Vegas to them, as opposed to having to actually travel to Vegas to experience Vegas. So right now we're at 60 people. Most of those obviously are dealers. We've got a development staff around 15, and we're growing quite quickly, and that number will continue to increase. So that's who Playgon is. I'm going to spend a little time here on this slide, because this is really important to understand the magnitude of what's going on in our industry. And obviously there's things that are generating the growth within online gaming, but it boils down to basically four things. That recently the COVID was the pandemic was the biggest one. It's exposed a lot of industries that had retail facing businesses. And the gambling industry is no different. I mean, visitations has been down in Vegas, Macau, all the gambling meccas. And it's really created an environment where the big land-based groups moving their digital strategies from a nice to have to a gotta have. And that's created a sense of urgency in the industry. So I think this is probably the single biggest event that's happened in our industry, which has created all the excitement in and around the space. Then you add into that the fact that technology, the new technology within the industry and access that these land-based or retail businesses have to new technology to deliver their brands globally. There's been another significant factor. Then, as I said, consumers. The consumer demand is much different now. You know, the old gambler that comes into the land-based and sits at a slot machine. Yeah, they're still there, but that's a dying breed. The new breed that's coming in is as I say, the millennials, the Gen X's, the younger demographic that want their entertainment on demand, and that's an important feature that's in the market here right now and driving the growth. And then lastly, regulation. I mean, you're hearing a lot about what's going on in the United States. Because we're local, we're in North America. Typically, this industry's growth has all been in Europe and Asia and other global jurisdictions. Really the epicenter of the industry over the last 20 years. But recently, with regulation in the US and other markets as well, Latin America, Africa, new jurisdictions are coming online. So that is all also driving the growth of the industry. And these four things basically coming together has created a perfect storm in the industry. And again, I've been in it for 2 decades. I've never seen, both from an operator standpoint and from a vendor standpoint, the euphoria around the growth in the industry right now. So that this is an important takeaway for everybody to understand, that this is a major shift that's happening right now today between the bricks and mortars brands in the industry going online. And again, those four things are driving this growth. I mean, you can see, you know, the area that we play in is in the casino space, but you know, and typically, you know, our industry without a doubt grows anywhere from 10 to 13%, you know, yearly. But again, there's been a quantum shift here, which is going to really drive, you know, numbers for the next 3 to 5 years, massive growth. And you can just see the presented growth in the online space as opposed to the land-based. So it's quite significant. I do think we're going to see the online space probably represent here in the next year to 2 years about 20%, as opposed to about 13%, which it typically represents as far as numbers in the industry. So we're currently at about 65 billion in the online space, and that's quickly going to go to about 100 billion here in the next 3 years. All right, so the landscape, you know, there's not a lot of companies that, because it's very difficult to build this technology, so there's not a lot of companies that do it, which is good for us. There's probably 3 that do it the best. Evolution, Playtech, and Microgaming, all 3 companies that have been around for a very long time. But they all build and have built their software from old technology. And when you reach scale, like our pure play comparable is Evolution, when we reach scale, you know, they don't have to, the way they innovate is they don't have to innovate with technology. They innovate with game content. So a lot of their software has been built from desktop, and it's mobile enabled. But when you're shrinking a technology from a bigger screen as a desktop down to mobile, you lose a lot of UX UI for the player. The user experience is much different. So I think the key thing to understand here is that everybody is delivering the same thing. Everybody is copying the incumbent, which is evolution, and it's all desktop product that's mobile enabled, which is a massive difference when as opposed to our strategy, which has been mobile first, and we're going the other way. In time, we'll do a desktop product. We probably have to for some markets, but right now it's a mobile focused product, and one of the key differences between us and our competitors. So I'm going to scoot around here. So, for those who don't know what Live Dealer is, it's basically a combination of streaming, social media, games of chance, and gambling, all coming together with one technology. And it's just not live streaming, it's interactive live streaming. So you're giving the player the ability to gamble on command or gamble on demand. So whether you're on your tablet or your phone, you're in transit, whether your session's 15 minutes or an hour, you have as a player, the capability to surf in and play through one of your operator sites in our studio in Vegas. So it right now is, to my understanding, the hottest technology within the online casino vertical, which would include, poker, slots, bingo, and some lottery products. But Live Dealer is the area of growth right now within casino, and it's important. This is mostly delivered as a table game content, which is timeless, as opposed to slot content, which my view is pretty much a commoditized content in the industry here right now. There's a lot of companies that are doing it because it's much easier to build. Where Live Dealer is much more difficult to deliver to consumers and to operators, because you have to digitize a video, send it around the world globally, zero latency to play. So the barriers of entry are very high. But again, my partner Guido's been in this space for 13, 14 years and knows it intimately. And there's a lot of IP that's packed into this technology, both from an operator's perspective and from a player's perspective. So that's what Live Dealer is. I'll scoot back here. Sorry. So what makes us different? Get this question asked all the time. But again, I think the key things are where we're broadcasting from. We're obviously leveraging the Las Vegas brand. We've trademarked the Vegas Lounge. That's how we're selling it to operators. And it transitions, as I say, right down to the entertainment value of our dealers, the way they're trained, the way they deliver the content. It's much different than many of the incumbents that are in the industry here right now that have studios in Eastern Bloc countries or the Philippines. Sometimes you can't even understand the dealers when they're talking. So we're delivering very much a North American look and feel with respect to the content. So if you were to put us up side by side, you would actually see the difference, the engagement of the dealers compared to others, the way they deal the cards. There's a lot of little things that go into delivering the content to make it look more like a Vegas product. And then secondly would be the technology, the fact that we built this for the mobile device, the tablets, phones. When you're dealing with a much smaller screen as opposed to a desktop, there's so much that you have to pack into a smaller screen with respect to how a user plays. There's lots of little things that go into the development of a product. The games you can play in your menu per hour, all the notification features that players would get, like road alerts and stuff that we can send down the line. Not to mention, it's all new technology. We spent 4 years building this. Probably 16 million has gone into the software building it, and we're just transitioning now from development to operational, which is where we're at here currently as far as the company. But you know, the key things here is the fact that it's a mobile product, portrait mode only. We've done a lot of research on mobile use. 85 to 90% of mobile users are all playing their games in portrait mode only. Some of the other players in the industry don't have the ability even to play in portrait. You have to play in landscape. So there's a lot of little things packed into the development of the product. And again, just quickly, this is why. I mean, smartphones. This is smartphone adoption in the industry. 50% of the world population has smartphones now, and as you can see, the future is unbelievable as far as the growth curve of smartphones and smart devices. Okay, so our strategy, again, leveraging our relationships, dealing with the operators in the markets that we know from past experiences, a combination of direct integrations and dealing with aggregators. That's our strategy to get into the market, not to mention the fact that the timing is right for this type of a product to come into the market. With the lack of innovation we feel that's been in the live dealer space for the last 10 years. So again, coming with a very innovative product to the market, leveraging our relationships in the industry, and knowing the operators to deal with, and also the aggregators to deal with in different markets around the globe. Our revenue model is pretty straightforward. We're a SaaS company, so you know, basically we just tap into existing user bases and databases. So there's no customer acquisition cost for us, and we share on revenue anywhere from 6 to 12% depending on what market that we're in. You know, they vary. The newer markets, you're getting the higher rates. Established markets, you're getting the lower rates. But the beauty about this is, you know, customer acquisition costs typically will range anywhere from $500 to $1,500 per user. That's USD, and we don't have any of that. We plug in and we allow their customers to come into our studio and play, and we share on table loss. So here's the numbers that we're putting forward here for the next 3 years. We're working on a EBITDA margin of about 30% here for the first year of operation, and that will go up to closer to 60-65% after our front end. You know, we're not going to have as much front end costs to develop the business because all the heavy lifting's been done. So top line, 20 million, bottom line 6 million. And next year, 50 top line to 32 bottom line. We're still very confident in these numbers in our first year of operations. We do feel we're going to deliver these numbers, and also quite confident on the customer promises that we're going to deliver here. 18 this year, and we're going to double that up next year. So I know that when we get to the Q&A, everybody's going to kind of be interested to know where we're at here, just at today's date. So, you know, we're locked and loaded to go live. That's going to happen any day. We've only announced 2 customers to date. There are other contracts out. There is other integrations being done. We haven't announced those to the market yet. So I just want the audience to know that is going on, and we will announce those as they get a little bit closer to launch. But the two customers we have announced, we hope to have them both up here within the next week or two. We've got all the staff hired, ready for 10 tables, 24/7. We've we've done all the testing on our soft launch, and everything's working fine. So we're just waiting to go up with these first group of customers and their customers, because they're both aggregators, so the customers that they service as well. So what can you expect from us for this year? We have done the expansion work to go to 15 tables in our current studio as player demand affords us to boot up more tables. So that work's all been done. So we'll probably be at 15 tables here by the end of the second quarter. Also, a major significant move that we're going to make is in the US market. This is something that I probably was not going to do until latter part of the year or next year. But that market is growing so fast, and we're having some very interesting meetings. Obviously, I can't disclose names. But just let me say that there's a lot of activity going down there for us here right now. We made a decision to get licensed for the three main markets down there, which is Pennsylvania, Michigan, and New Jersey. We've started that process, and my plan because we're so young and we're a new brand and we're trying to establish a brand, is to end up trying to do a joint venture down there with a known name, a name that probably everybody that will recognize, and attack the US market under a combination of their brand and our brand, which will be able to lever off their relationships and also get us into the market much quicker. It's growing massively. 2018, this was a market that was only about 800 million. And currently this year, it's on track to probably do somewhere around 5 to 6 billion, both in casino and sports. So, with the growth and some of the meetings that we're having, we decided to move into this market a little bit quicker than I had originally planned. So, hope to make some announcements there, hopefully by the end of this quarter. And obviously, revenue growth. We're, as I said, we're all the development's done, and we're going operational. So we hope to generate some very significant revenues over the next 12 months. So that being said, I hope that's 20 minutes. I guess I should probably talk on our cap table. Give or take $100 million market cap, depending on the trading. We got 200 million shares out. And when we bought this technology in June, I think we were at a $26 million market cap. So we've to the credit of our guys, our marketing team, and our company and our vision, I think the capital markets have it's been well received. We've got obviously we've got to build our revenue and our business to accommodate this market cap, but the whole industry is very explosive right now, very euphoric, and we do think that the future is very bright for us. So yeah, that's where we are on our cap table right now. And you can go to our website and view our management team, but again, we've got a lot of experience in this space, and we're going to lever that experience. And we're innovating. We're innovating in live dealer, and we've had a lot of meetings here over the last 3 months, and we're very confident that we're going to deliver on our customer count, and very confident we're going to deliver on our revenue growth. So this business, once we're up, will scale very, very quickly. And that should bode well for all our shareholder group.
All right, Darcy. Well, in the interest of time, we have a whole whack of questions here. So why don't we get started on that?
Sure.
I'm going to remind everybody that they can use the Zoom Q&A function at the bottom of their screen if they'd like to submit questions directly into the platform. Our first question, and maybe Steve, I'll start with you here. We've had a couple of contract announcements as of late. There's some questions regarding integrations in going live. Maybe you could provide some color as to what that process looks like, when we can expect to actually go live, and really what, if any, is the cause of the holdup.
Yeah, thanks, Corey. So let's start with the last part of that first. I know that for most of us who live in this modern world of instant gratification, if something doesn't happen very quickly, we think that, as the word you use is hold up. There has been no hold up. We are moving at lightning speed. If we go right back to the beginning of the presentation, Darcy talked about the moat around this business. It's very difficult to break into. It requires years of development, years of contact making, as well as tens of millions of dollars. So we've basically started this process last September, and we will have our first paying customers very, very, very likely up and going by the end of this month. That's unprecedented in this industry. It's unprecedented anywhere. It's a miracle, actually. The risk is that we've run too fast, right? So all of the technology behind this, we use words like integration as if that's just plugging in a lamp. The complication behind that is extraordinary. And all the integrations that we have done, they're layers. So our main API integrations have gone flawlessly, but now you run into all of the little things. Just to give you an example, every single one of these operators has betting limits. So just like a regular casino, there's betting limits for a game, then for regular players, then you've got a different level for your significant players, your whales, and then for every game, there's multiple bettings. And all of these things have to happen perfectly online. You think about the amount of money that's moving all around the globe through any one of these games at any moment with the thousands of players, it has to be seamless. So all of these things get layered in, operator by operator by operator. It's happening at breakneck speed. It's bizarre, actually, that it can happen this quickly. I think we're well ahead of schedule. If there is any problem, perhaps we haven't given all of our investor base the right expectation. But I can tell you, and we're, without even being revenue generating right now, we have another 7 people we're hiring here in Vancouver. We have another 7 people we're hiring in Las Vegas. We're expanding well beyond what we thought we would be at the first year. We're in fact looking at opening up another whole studio right now as well. So yeah, I would say that to answer your original question, we expect to be live, revenue generating before the end of this month. And we have at least another 6 integrations ongoing behind the scenes on top of the first 2 that were announced.
And you bring up an interesting point, Steve, and maybe some of our newer audience won't recognize this, but when you speak of different betting limits and different table sizes and things of that nature, is it fair to say that each operator and each aggregator that we're working with has multiple websites? So when we sign one operator or one aggregator, it spreads out through an entire network. So one customer announcement isn't necessarily one website.
Sure. When you just take a look at Swint, for example, we're doing integrations into at least 9 of their operators right now. So you come into the platform through Swint, and then from Swint, you have to go into each one of these and all of their variables and variations. It's not like a world where there's 2 softwares. There's Apple and there's Microsoft. Each one of these all have they're all proprietary, and they each have their own proprietary things that we have to integrate into perfectly. This is not something where you can be 99% correct. It has to be 100%, right? You're dealing with a lot of money, millions of transactions, every day, all around the globe. This is rocket science.
Got it. Very interesting.
I just want to add into that. What the listeners have to understand, there's two ways we can get into operators. We can get into operators directly, do direct integrations, or we can get into operators through these, what we call aggregators. Aggregators in the industry are companies that their business is, they deal with a lot of third-party content that they aggregate into that one platform. And then what they do is their business model is they take that platform and they offer content to different operators in the industry, so that their integration into those operators gives them access to probably 20 different vendors' content. So when we integrate into an aggregator, that's the main highway into the aggregator. Now, off that, there's multiple operators that would feed into that, different highways that feed into that main pipe. So each one of those operators, you have to do betting limits. You have to put a tab on their website to actually access into the Playgon studio. And you have to do user acceptance testing. So let's just take Swint, for example. They've got 65 operators that they deliver content to. Now, we're not going to get all of them, but we're going to get a big portion of those operators because we're their only live dealer supplier. But each time when they get a customer to sign up for the live dealer, they have to do all those customization, user acceptance testing, and bet limits. That all has to be done. Now, it's quite quick, but it's still time consuming, as Steve mentions.
Got it. So Darcy, maybe you can tell us, when you walk into the room, or the virtual room, I should say, with a prospective operator client or an aggregator, and they've been using the same software for, however long it's been, what makes them so excited about Playgon? What's the differentiator that you guys are bringing to the table that they go, we need to integrate this immediately, we need to offer this to our players?
As I said, it's a lot of things, not just one thing, but operators all want to have something new and innovative to make themselves different from the people that they compete with in market. So if they can get access to some content that's new, whether it be a live dealer product or a slot offering, because they have users and they have to keep their content fresh for their users. So the biggest selling points for us is the fact that there's a lot, but the two key things is where we're delivering the product from. It's very different than the live dealer feeds that you're getting from different locations around the world with the incumbents. And two, the fact that it's a mobile offering as opposed to a desktop that works on mobile. And I can't emphasize it enough as a user when you're playing on a phone, the difference between a product that was built for a desktop and a product that was built for a phone. So I think those are the two key things. And as I say, we're innovating the live dealer space. So there's nothing out there like this. It's all new tech. The way we deliver our video, we use WebRTC. The others don't. So that's zero latency no matter what country you're in. We've tested this all around the world, and that's important when you're playing a game that's streamed, an interactive streamed, but streamed. You don't want to wait for a delay to get your cards up or to make your bet. So it's a lot of little things that are packed into the product with respect to user, but those are the key things. The fact that it's mobile. And just to let everybody know, mobile now probably accounts anywhere from about 60 to, depending on which jurisdiction you're in, 60 to about 85% of the revenues are coming into these operators via mobile devices, whether it be a phone or a tablet. That's why it's critical the way we built this thing. I mean, there's a lot of thought that's got into the development of the product, but again, that's a long answer, but that's the main thing that's selling the product.
And just to clarify for one of our audience members, when you say mobile, that obviously includes mobile devices like your cell phone, but does that include things like tablets and iPads and things of that nature?
Yes. And Corey, just to add on to what Darcy was saying, you know, a lot of these operators around the world end up using, you know, as he said, the elephant in the room, which is evolution. And, you know, they don't like having only the one provider. You know, they feel like they're handcuffed in their business to the one provider. So they're also looking for an alternative, which we're bringing. We're bringing a fresh look. All of the other content that's out there is all done in the Latvias, the Estonias, the Ukraines of the world. That's where all the studios are. So you're getting that whole Eastern bloc. So here we're bringing a fresh American approach, you know, American people live from Las Vegas with a completely refreshed look, as well as a brand new game. You know, Tiger Bonus is the first new Baccarat game that's going to be so popular. So they're dying to get this on. They want fresh content from somewhere new through a new operator. We hit all three for them.
Yeah. And, you know, and the simple thing like our multi-license, to my knowledge, this is the first time that a regulatory environment like Malta has certified a studio in North America to broadcast in regulated markets around the globe. It's not been done. And, you know, it took us a little bit longer due to, you know, some pandemic related issues. I mean, no one's going into the office in these regulated markets just to get your license. You know, it took us 5 months to get that. I had budgeted probably a couple months to get that done, but it just takes time. But it was a significant milestone for us because it's never been done before, and they had to do their technical audits. We had to walk them through our studio via mobile, all the regulators via a mobile device, so that they could, you know, see our studio in operation. So, you know, there's been lots of little things that have happened that are milestones in the industry, but you know, I'm sure that the listeners, you know, take stuff like that for granted. But it was a major endeavor on our part.
Maybe we can talk a little bit about, you know, as we're speaking of an Americanized product, who are the players that we're going after? Who's our customer base that we will develop this product for?
Okay, so the big thing about the movement in the U.S. market as compared to global, I mean, typically this industry has been built on online brands, online sports betting brands. But now with this convergent, with land-based groups coming in, which is basically a new growth within the industry as land-based operators are coming online. So just in the most recent you know, time period, you know, we've got MGM that's come in, we've got Caesars that's come in, we've got Bally's that have come in. Hard Rock's come in, Penn Nationals come in, and now the Sheldon's passed on. God rest them. The Sands is now looking to make a move, and they'll come in and they'll buy a big brand, and they'll make a big statement to get involved in the online space. So all those names are getting in the online space, and as I said earlier, this is a part of their strategy that they wanted to have, but it's more like they must have now. So that's really precipitating the growth in the US. And we're talking about a market, as I said, in 2018, it just started, was about an $800 million market. It's now running about roughly $5 billion. The numbers over the next, you know, no one really knows, but the next 5 years, they're saying that's going to be anywhere from 15 to 20 billion. So it's the new shining toy in our industry. Everybody is jockeying for positions to get in there. And again, my strategy is to do a deal with a known name, which will help us create the Playgon brand in that market. So it's a lot easier getting a deal if you're walking in with a name brand and a relationship with a name brand, where we're competing with, you know, the likes of Evolution, which have been around since 2005.
So Darcy, we're getting a lot of questions on the US side and the US strategy.
Yeah.
So, you know, the first question is, as we enter each state where gaming and online gaming is legalized, Should we get our license there, are we required to build a different studio in each state?
Okay, so that's a very, very good question. And it's, I guess the way I'll answer that right now, it's a fluid discussion that's ongoing. We are gonna have, let me back up. There's been a recent, an opinion done on the Wire Act where it only applies to sports betting. So a company like Evolution has gone into that market and had to build a studio in each jurisdiction. Okay, so I think that they've got 3 studios going. My idea, and we've had through our law firm a preliminary discussion with the New Jersey regulators about putting 1 studio in New Jersey and servicing New Jersey, Pennsylvania, and Michigan. Those are the 3 core iGaming markets here right now. That's where most of the iGaming or online or casino business, yes. So we're in the next couple of weeks, we're going to have a presentation about our company to the New Jersey regulators through that's been brokered by our law firm. We've hired Dwayne Morris down there, and we're going for our 3 licenses. So the plan is, yes, to try and pull this off having 1 studio, but barring that, and we can't use the studio in Vegas. We already know that. We would have to put up another studio in one of those 3 jurisdictions I mentioned, because they do have online casino legislation. Nevada doesn't have that just yet. So we're going to use the Vegas studio for regulated markets globally, and probably going to have to build hopefully 1 studio in New Jersey to service the other 3 markets. That's the plan, but it's early on, and we'll keep everybody posted as to what's going to happen there.
Now, I'm going to reframe this next question a little bit because it's in line with our conversation, but based on your answer just now, would it be beneficial that if we do have a joint venture with a US gaming company, that would be beneficial and potentially expedite this process?
Yes.
Got it. Very good.
You know, there's a lot going on down there. We've got a relationship with 2 banking groups in New York that are also helping us facilitating introductions into some of the names down there, which we're very grateful for because they know our company, and they see the potential we have for this market. It's very young. To the listeners, it's a very young market, but it's growing very fast. I think that Evolution probably would have you know, they're definitely dominant in that market, but it's a good market for us to compete with them because we're local. I want to do that with a name partner as opposed to not. And I think we got a solid strategy to go after that market. And as I said, I hope to make some announcements here before the end of the quarter.
And Corey, it's probably worthwhile noting that in our forecast, and our 3-year forecasted numbers doesn't include 1 dime of revenue out of the US. This is actually a big pivot for us. We had, you know, 6 months ago, we had no plans to enter the US market at all. The world has changed, as Darcy just described. So we are now making a fairly significant pivot over to the US. If you look at all of our global business, it's based on us selling directly as a B2B provider. Here, as Darcy just mentioned, our entire strategy shifts a little bit, and we're going to be looking for a major partner to get into the US market with, which will make it faster. And of course, you know, in the US, brand is very significant. So we'll be doing something with a significant brand player.
Very good. And while we're on the topic of revenue, you know, we have on that slide that we anticipate 18 customers this year. One of our viewers wants to know if an aggregator counts as 1 customer, or is each customer that connects by an aggregator counted as 1 customer?
Each customer that connects.
Yeah. Right. Very good.
So let's put some context around that. So, you know, we've announced Swint, but to the point of the question, we're actually going to put a lot more operators on. And in some cases, and here's one of the reasons why, you know, we think that we don't really have an understanding of what these operators like. Some of these are huge businesses. They're doing 50 million or more a month in business. This is what they're taking in, you know, on player losses. They've got large organizations. Like some of them have told us they want our product, but they can't integrate us for another year and a half. That's how busy they are.
Mm-hmm.
So for us to get into their business, we'll go through an aggregator, right? Because they're already connected. It's like a back door into their business. So it's not that we're dying to use aggregators, but in fact, in a lot of cases, it's the best and most efficient way for us to get into significant business.
Yeah. And, you know, the challenge in our industry, because everybody is, and usually always are busy, there's only a limited amount of resources that most companies have to do integration work. So obviously the preferred route for us is to do direct integrations, because we don't have to do any revenue sharing to actually get into a big name. But speed to market, that's why it's important that we have both things that we use to get into operators, because as Steve said, sometimes even if they want it, they don't have the resources to do direct integration. So the quicker way is to deal with you know, a number of key aggregators that we know in the industry that have already integrated into these big names, and then we just integrate into them, and then that's the quickest way to get into them, as opposed to just waiting to do direct integrations. It would be very time consuming, and in speed to market, we have to do it this way.
Great, thanks Darcy, thanks Steve. Our next question states 70% of Evolution's gaming revenues in 2020 stemmed from mobile devices. So essentially, most of their business is already mobile. Could you put a little bit of color into why Playgon's mobile tech / user experience will be so much better than theirs?
Again, it just goes back to what I originally said when we were talking about Evolution's been around since 2005. Their core product is a desktop product. When you reach the size of them, of their business, they don't have to worry about building a mobile tech product. It would be a major rewrite for them. And why would they do that? To actually change their technology to work on a mobile device the way ours does. When we've had the luxury to come in later with newer technology, and it's like taking a Lamborghini and change it into a Range Rover. I mean, you know, stuff just, it's not possible. And why would they do that? They're a $600 million company right now a year. They don't need to go rewrite their software. So the way for us to compete is not to go copy them. The way for us to compete is to build something different where the market is. When Evolution built their business, it was a desktop business. So, you know, the market's grown on them. It's shifted on them. Their product works on phone. But as I go back, this is Evolution's product. Simple things like the size of their video takes up about 30% of the phone size. Ours is about 50%. You can't see, a lot of the times on the tables, you can't see cards, but you can see cards on ours. Just the cleanliness of the trends that we do on our mobile device. I mean, baccarat bettors and roulette bettors all bet on trends. Our trending options in our phone are much different. So, you know, we could spend an hour talking about the differences of the two products and what's packed into into this mobile product as opposed to them. But this is what makes us different, and this is what's resonating with the customers. So, and this is how we're going to compete with them. So you can compete on product, or you can compete on price. We don't want to compete against them and just be a copycat like everybody else is doing.
And from Corey, from an investor's perspective, if you want to get, you know, those are features and benefits. But if you want to get down to the money of this deal, you know, on our devices, on our platform, you can play 8 games at a time. where you can't on evolutions. We get down 3 bets in the same time it gets them to get down 2 bets. We're going to generate more revenue per player than anybody else in the field.
Right, that makes a ton of sense, and I suspect that's why many of these operators are so excited to implement this solution. It's more money in their pockets.
Right,
Well,
and it's different.
The other beauty is you know, there's nothing like being the Pepsi in whatever year it would have been, 1963, coming into Coca-Cola's market. There's nothing, you know, there's an incumbent out there with a $36 billion market cap, and our job is to eat into it with a better product, and we've got it, and we're sharpening our teeth.
You know, on that note, maybe we can highlight, Darcy, a little bit of, you know, your background and your partner Guido's background, or your business partner Guido. Many of us have heard him speak before. Has he, you know, what's your experience in this space? What's
In the
his
live
experience
dealer,
as well?
live dealer space?
Yes.
Well, our relationship dates back to when we were building the Chartwell brand, and I think in 2008 we licensed as a third-party product from Guido, who was working with the Ho Gaming Group at the time, building up the Ho Gaming's tech arm in the Asia market with live dealer. So we licensed the product and as an aggregator and a game developer, and we licensed it out to our operators in Europe. So that's how I first got introduced to Guido and the whole live dealer space. So so that was back in 2008. This product, or this technology, really didn't start to resonate with the operators until about 2014-15. And if you go back and check Evolution's chart, because they are the name in the industry, you can see where their business started to ramp up from that time period. And that's when the operators really started to take hold of this technology. You know, I don't know, I hate to digress, but you know, back in the old days when I was working with Amaya, we actually went into to take a look at Evolution because they at one time were for sale. And you know, I think at that time they were saying that their company was worth about 800 million. You know, we at that time we did put a bid in to buy the company, and this is before they went public. The deal didn't happen. It's too bad, but the deal didn't happen. And now they're a $30 billion market cap company. And, you know, that they are a great company. They what they do is great, but what we do is different. And I think this is the best way, from a product perspective, how to compete with them in the market to grab market share. We're certainly hearing that from operators that we're showing our product to and talking to, not to mention, you know, Steve's point about mitigating business risk with dealing with one main name in the industry. So they're looking for options. They're looking for opportunities, other live dealer opportunities. And we're bringing innovation into the space, and that's what's grabbing hold right now.
Okay, guys. Well, I mean, we're pushing up on the end of our time here, so I'm going to pass it back to you, Darcy and Steve. If you have any kind of closing remarks, any last thoughts you want to leave investors with as to what to look forward to over the coming months, coming weeks, that'd be great, and then we can close up shop here. Yeah.
Okay. So maybe I'll just kick off, Steve. In summary, everybody, you know, thanks for joining us in this crazy time. Be safe. But you know, there's always a silver lining in stuff that happens globally. And you know, for our industry, you know, this pandemic has just been unbelievable because it's turbocharged our industry. From all the operators we talk to, their businesses are up, you know, 500, 1,000% from all the vendors in the industry. They're supplying content in much greater capacity now. Everybody's very busy. We're very busy. Our business is going to scale very quickly once we're up. Thanks for your patience. I mean, obviously we underestimated time to go live here with the product, but all the heavy lifting is done. We're locked and loaded. We're going to be up very soon, and things will scale very fast. And we've got exciting news to come. Obviously, there's not much I can say here in and around selective disclosure, but we're very busy. I'm doing 12-hour shifts, and there's a lot of exciting stuff to come, and announcements we'll make here over the next the coming year.
Yeah, so thanks, Doris. So I'd like to thank everyone for giving us an hour of your time. It's much appreciated. The one thought I would like to leave you with is the one that I have for myself is I look at our business much like you would look at the U.S. space right now, the space. You know, you've got NASA, which has been around forever, and they're still building rockets, and they cost billions of dollars. They get used once. They're only good for so much. And then along comes this little company called SpaceX. And suddenly they're building reusable rockets. They're building rockets of different sizes for different payloads. They're recovering. They're launching them quickly. They're bringing new ones to market quickly. And they're doing it so much cheaper. I look at us as SpaceX. And I look at our competitors, who shall go unnamed, as NASA. And I think about that every day. We're quicker, we're cheaper, we're faster, we're better. That helps me sleep at night. Have a great weekend.
Guys. Thank you so much, everybody. Darcy.